All right, very good. And good afternoon, everyone. It's great to see so many people here. This is going to be a very important afternoon. I think we're all going to learn a lot. This will be the first in a series of presentations by the Flood Control District to discuss the threats and impacts of wildfire on property insurance here in Coconino County. And as you know, we on the Board of Supervisors do not have the authority to make those decisions for fire insurance. However, we want to be part of a partnership and part of a discussion with the state, federal, city of Flagstaff, and of course with those in the insurance industry itself. It is certainly an issue that is becoming more severe and is an issue that we as the Board of Supervisors are hearing from on a regular basis from our residents and constituents. So we really are looking forward to this today. And we are, for those of you who are joining us, we are on agenda item 31, presentation of Flood Control District Board of Directors to discuss the threats and impacts of wildfire on property insurance in Coconino County. And as I said before, this presentation is the first in a series of presentations to discuss the relationship and issues related to wildfire and property insurance. And with that, I see our Flood Control District Director, Lucinda Andriani, is here. And Lucinda, I'm going to turn this over to you to make the introductions, or I'm so sorry. We have our Deputy County Attorney. Yes. It is. And thank you. I didn't notice that. All right, we're backing up, everybody. I would entertain a motion right now to resolve it's a Flood Control District Board of Directors.
I'll second.
We have a motion and a second. All those in favor of resolving as a Flood Control District indicate by saying aye.
Aye.
Aye. It is unanimous. We are now the Flood Control District Board of Directors. We might look the same, but we are different. So with that, I'm going to turn this over to our Flood Control District Director, Lucinda Andriani.
Well, thank you so much. It's, it's exciting to be here today to be launching this discussion and process. As you know, the intent is to hold a series of work sessions over the next few months looking at this issue, the issue of wildfire and insurance, which we've now coined this phrase of the wildfire insurance crisis. And today is really focused on launching this discussion and effort and educational process with the board and with the public, so that we can move forward. And I'll come back to that. As you all know too well, as Chair Horstman has said in a number of interviews we've done over the last several days, we've had a front row seat to wildfire and post-wildfire flooding in this county. No surprise, Headwaters Economics that's here with us today, tremendous experts and expertise in this arena. We are in the top 4% of those areas, counties that are at risk for wildfire in this country. There is a confluence of issues across the West that are now creating this crisis. And it's really has begun over the last, I would say mostly the last maybe 6 months, where it's really emerging in this county and in this state. And as I noted, we're launching this set of work sessions to take this issue forward. National statistics show that since 2005, there have been more than 120,000 structures burned, with damages exceeding $70 billion. And I frankly don't think that includes much of some of the post-wildfire impacts. 46% or more of these costs are felt at the local level. And we have seen that here, certainly felt by local governments, local property owners, local economies. The high cost of wildfire and recovery and rebuilding are among the many reasons why home insurers are raising rates, issuing non-renewals, and exiting the many high-risk areas. Our residents are experiencing these issues as demonstrated by the growing number of calls and emails that you're receiving on this issue. As with other issues this county has confronted, our approach is first to educate ourselves and the public, then formulate strategies, and then take thoughtful and impactful action that recognizes what are the county's limits relative to our legal authority and our financial resources. This is extremely complex issue, very, very complex issue. And it's important to note that the Board of Supervisors has no authority over insurance companies. Regulatory authority over insurance companies rests with the State Department of Insurance and Financial Institutions, what we affectionately call DIFI. It doesn't exist much. There's very little regulation at the federal level. I'm proud that it was this board, particularly Chair Horseman, that worked with the governor to establish DIFI's Resiliency Mitigation Council, which is working on this issue and will be providing a report and with recommendations to the governor later this year. This is an important step, but it will take many steps to address this very challenging issue. And this probably won't be solved at any given level. It's not going to be solved at any given level of government. So we hear people all affectionately say, maybe pontificating or stating that they're involved in this issue. It's going to take everybody involved in this issue to address it. It's that complex. The goal of today's session is to bring in the experts in this arena to provide foundational information to the board, county leadership, and the public about this issue. We are extremely fortunate to have two experts with us from Headwaters Economics today, Dr. Kimiko Barrett and Doug Green. I served on the congressionally established Wildfire Mitigation and Management Commission with Dr. Barrett, Kimmy, as she goes by, and she is a nationally recognized researcher and expert relative to wildfire and, in particular, the insurance issue. Her contributions to the commission and the ongoing efforts of the commission has been masterful and very impactful. Doug works primarily with communities like our community, and in fact, he's working with the city of Flagstaff, facing the high risk of wildfire and the myriad of issues associated with that risk. As you will see, there are many elements to this issue. Today's presentation will provide a strong foundation for future work sessions that will delve into these elements. I'm privileged now to turn it over to Dr. Barrett and to Doug. So with that, Amy, you can go ahead and share your screen. And again, thank you so much for joining us today. We really appreciate it.
Absolutely. Thank you so much. I'm assuming you can see my slides and you can hear me okay.
You know, we are going to see if we can turn you up. It is a little, the volume's a little low.
Muted. Okay, I can keep talking here as a.
There you go. We're starting to hear
1, 2,
you now.
3.
We have some thumbs up.
All right, terrific. If I should become quieter, there's issues on the audio and sound, please feel free to interrupt me. Doug and I are going to be tag teaming this presentation. However, I'm the one who's going to be transitioning slides. So if there's a lag period, again, forgive that, and then give us a heads up if something's not coming across correctly on your end. But thank you so much for that introduction, Lucinda. Thank you, Board of Supervisors, for your time and attention on this very critical and complicated issue. A heads up and a great appreciation to Lucinda and Jay for inviting us to be part of this presentation. We do want to acknowledge the City of Flagstaff's fire department who we're working with, and they are also starting to dive into this very complicated topic. And then to everybody else who's either listening online or in the room, who are more curious about learning about this very complicated, wicked issue that we're looking at with respect to wildfire and insurance, not just in Arizona, but across the West, because it is very nuanced. There is a lot of detail to it. There is no single silver bullet to any of it. And my colleague Doug and I are here to just try and unpackage it, to provide that foundational baseline, as Lucinda said in her introduction, and to just help see how this unfolds at the community scale to impact residents in Coconino County and elsewhere who are trying to grapple with this issue and come up with approaches. So with that, I will transition slides. I'm assuming that that worked on your end. The way we want to structure and frame this presentation is to break it down into 4 different topics. Looking first at the increasing wildfire risks. What are the trends? What are we looking at with respect to just wildfire impacts and the costs associated with that? I'll then turn it over to my colleague Doug, who can talk about the science of how a home burns down in the first place. Because with this very, very understanding framing of the science of home ignition, it helps provide a better approach for understanding what the impacts can be for the insurance market and what that might look like, again, at that community and county scale. And then we'll end it with some community level risk reduction strategies that can help set you up for success in trying to better approach and resolve some of this increasing crisis. We will talk for about 30 minutes or so, and then we'll have time for questions at the end. So please note any questions you may have, and we're happy to field and respond to those at the end. Before we get started, I do want to quickly reintroduce myself. My name is Kamiko Barrett. I am a wildfire researcher and policy analyst at Headwaters Economics. I had the great privilege of working alongside both Lucinda, who is there in the audience, as well as Neil Chapman, 2 residents from Arizona, on the Federal Wildfire Mitigation and Management Commission. And it is through that experience and that opportunity that we've been asked to talk with you today. Doug and I do work for Headwaters Economics. It is a nonprofit group. It's focused on community hazard resiliency and helping communities make informed land management decisions. As part of Headwaters Economics, we manage the Community Planning Assistance for Wildfire, or the CPAW program, which looks for solutions to communities' wildfire risk through land use planning, research, and policy. If you have more questions about CPAW or Headwaters Economics, again, we're happy to answer those towards the end of the presentation. So let's get started and talk about increasing wildfire risks. And I'll frame this up largely with respect to the 11 Western states, though many of these risks are truly transboundary in nature and ubiquitous across the country. In that, we know risks are increasing as wildfires burn hotter, they're lasting longer, and more homes are located in harm's way. This, of course, is causing more damage and costing more money. As Lucinda noted in her introduction, nearly 130,000 structures have been damaged or destroyed by wildfires since 2005. Almost 2/3, or 65% of those, have been located in California alone. But as I'm sure many of the fire personnel in this meeting are aware, wildfire disasters are increasing across the country, with states outside the West, like Oklahoma, Tennessee, Texas, Florida, and Georgia, similarly experiencing growing wildfire threat. In Arizona, for instance, there are more than 157,000 structures located in high-risk areas to wildfires. And in turn, we spend a lot of money in response, recovery, and rebuilding, and these costs are only going up. For instance, from 2000 to 2010, $70 billion was spent on response and recovery. And as Lucinda also noted, this is probably a conservative estimate when you account for long-term post-fire recovery costs. Today, wildfires are the fastest growing source of hazard-related damages in the United States, with 9 out of 10 of the most expensive wildfires occurring since 2017. And homeowners' claims are quickly outpacing what many insurance providers are willing to pay. Nearly half, or 46%, of all wildfire costs are borne at the local scale when you account for both short-term expenses and long-term damages, many of which come up in the many months and years following a wildfire. Again, as many in Flagstaff are probably familiar with, given the Schultz fire and previous wildfire disasters. For instance, in Hawaii, a year after the Lahaina fire of 2023, the state legislature allocated $1 billion in recovery funds for emergency housing, rental assistance, and victims' relief. This placed an added financial burden on the county, as well as local governments, homeowners, families, and businesses, as well as direct implications on the tourism and recreational economies on the island of Maui. And we additionally know that wildfires, like all other disasters, are not affected equally, nor are those costs accounted for across the board. Many long-term barriers influence the ability for people to prepare for, respond to, and recover from a wildfire. We know, for instance, following the Camp Fire in Paradise, that more than 50,000 people were dislocated and were forced to live out of hotels, campsites, and parking lots, like in the nearby town of Chico. And many are still struggling to recover from that single event. And Coconino County is no exception, unfortunately, with wildfire risk greater than 96% of all other counties in the United States. A vast majority, or 98% of all homes and buildings in Coconino County, are either directly or indirectly exposed to wildfires, meaning that they can be ignited by nearby burning vegetation, embers, or neighboring structures. And while many of you in this audience might be aware of this risk, many Arizona residents may not be. And this does present a challenge in how you communicate what the implications and consequences are of increasing risks and what this might mean for homeowners insurance. But before we get into that any further, I'll turn it over to my colleague, Doug, who can talk a bit about how a home burns down.
Great. Thank you, Kimmy. Good afternoon, everybody. You hear me okay? I take it? All right. Okay. We're going to talk fire here, and we're going to talk about how a home burns down, because it seems elemental, and I know there's folks in the audience who understand this, but there's a lot of misconceptions about this. And until we really understand how a home burns down, we're not going to be able to solve the issue of losing communities to wildfire. And with that, we're also not going to be able to solve this insurance crisis. Okay, so we're going to kind of break this down and talk to you on how these homes actually burn down in a wildfire to stop this wildfire sequence of burning down communities. So next slide, Kimmy. So there's really three ways basically in which a home burns down during a wildfire. The first way is through direct flame contact. And I need to make sure I thank our partners, the Insurance Institute of Business or Building and Home Safety, who helped develop this slide and we partner with on a lot of this research. So again, the first way is through direct flame contact. And this is probably how most folks think of when they think of a community being burnt down by a wildfire. They think, I mean, the public misconception out there is there's this huge fire front that comes in maybe from public lands, a forest, or large tracts of private land, bears down on a community in this monstrous wall of flame and devours the entire community with really nothing the community can do to stop that, right? This is that kind of that crown fire sequence. And although that we have definitely seen communities burn down in this way, it is pretty rare. Most communities do not burn down through this sequence. We'll talk about that in a little bit. But a direct flame contact is when you have something next to a structure, wood pile, vegetation, maybe an RV or a boat that catches fire, and that causes direct flame impact onto that structure, right? And then that structure burns to the ground. And a good example of this would be, basic example, if you're sitting in a campfire, the marshmallow on a stick, and you put that marshmallow in the flame, right? We know what happens. That marshmallow burns up and is no good, except for my kid loves burnt marshmallows, and so he likes that, but most people don't. And so that's kind of the direct flame contact sequence. The second way is through radiant heat, flame radiation. And this is when you have something burning, a combustible fuel package. Again, it could be an RV, a boat, trees, or another home that burns hot and fast, and the BTUs put off of that then cause the structure adjacent to it to catch fire. There's no direct flame contact. This is just BTUs being radiated to the next home. And this is part of that initial sequence, which we'll talk about in a second, that causes this urban conflagration. You have this radiant heat causing structure to structure to structure ignition. There's not necessarily flame contact with that. And again, an example of this, and I know it seems elemental, but if you take a marshmallow, you don't put it in the flame, but you put it near the coals, you get a nice golden brown marshmallow. If you leave it there too long, we know what happens, right? That marshmallow catches on fire. So that's radiant heat. But by far the most common way we lose communities is through embers. And again, I know a lot of you in the audience know this, but it's really important that everybody understands the foundation of how we lose communities here, right? When you have a wildfire, whether it be adjacent to or within a community, and that fire lofts embers up in the air, especially when there's high winds that are usually associated with these fires, those embers can travel up to 4 miles in front of that wildfire, right? And those embers land on anything and everything. And if that is flammable or combustible, it will ignite, especially if it's dry conditions, there's low humidity and high winds. And when you have tens or hundreds of thousands of these embers being lofted into communities, you have dozens and dozens of ignition sources. And if those ignition sources then ignite homes, you have dozens or hundreds of homes that are then ignited and catching fire. Again, this accounts for 90% of all home losses in these large urban conflagrations. And, you know, this is different than fighting a structure fire in a normal environment. When we have a single structure on fire, the fire department is able to respond to that. They can put water on that fire to reduce that heat. They can also cool down neighboring structures to keep that radiant heat from igniting that neighboring structure. So that works in most structural operations. But when you have, like I said, dozens or hundreds of homes that catch fire, like we saw in Lahaina, like we saw in the Marshall Fire, like we saw in LA, the fire department is focused on one thing, and that's getting people the hell out of the way of that fire. It's evacuations. They do not have the resources or the time to get in there and knock down the fires that are burning. So this then causes that structure to structure ignition, right? Lots of structures burning, especially in high dense neighborhoods. Those structures ignite neighboring structures, and you have this domino effect that wipes out entire communities. And we'll see the post-fire pictures of that here in a little bit. The silver lining for this is that out of all three ways that communities can burn down, ember mitigation is the easiest and most cost-effective to mitigate against. We know the science on this. We know how to keep homes from burning down due to embers, right? We've done this in communities over the years. So unlike radiant heat and direct flame, this is something we have the ability to solve. And, you know, the science has been there. Again, our partners at IBHFS, and some of you have probably seen these demonstrations. It's pretty telling. They built these duplex homes in these large hangars in North Carolina. And they have these giant ember machines and giant wind fans that blow these embers against this structure. And it's mimicking pretty exactly what it looks like in front of a wildfire. And they did this a number of times. And if you'll see on the next slide, the left hand of the structure is built with cedar siding, single pane windows, and some vegetation around it. The right side is more traditional. You have cement siding, double pane windows, and no landscaping around the structure. And this is a couple minutes into it, but you can see what's already happened. The embers have ignited the vegetation around the structure. That has carried the fire to the cedar siding and under the wooden deck. That fire then, flamed by the high winds that are associated with wildfires, moves up that cedar siding, potentially breaking the single pane windows due to the heat, and probably entering that attic vent that's up there. We all know what we keep in our attics, right? Cardboard, Christmas decorations, lots of things that burn. And as the fire folks in the room know, once we get intrusion of that fire into that home, whether it be through the window or through the attic, you're pretty much going to write that home off. Even if you can knock the fire down, the damage from the water and smoke is usually a write-off. And they did this a number of times, right? And every time the results were the same. The home on the left was a complete loss. The home on the right was saved. And again, if you look at the home on the right, we're not talking about a concrete bunker. We are talking about a fairly traditional standard home. The windows meet the energy code standards that are out there, typical hardy siding, and some gravel landscaping around it. So nothing out of the ordinary on that. But each time that solved this ember problem. You know, and again, we see this with post-fire photos over and over again. We see structures burning or burnt and green vegetation. This is not caused by a crown fire moving into this community. these trees are green, right? The vegetation is green. This is not a huge, unbearable, unmanageable fire moving into a community. This is a fire from adjacent to the community that dropped embers into this community, ignited vegetation, ignited pine needles and gutters, maybe a boat, a wood pile, lawn furniture on the deck, causing one or more of these structures to ignite. And then you had structure to structure ignition. And there is nothing a fire department can do about this. It moves too fast. It's too dangerous for them to get in front of. And this domino effect goes until either it runs into a natural fuel break or environmental conditions change where you have more humidity and less winds, right? So again, we see this over and over again where this is an ember problem, and we know the science on how to solve this problem. And it's really important for everybody there in the audience and everyone we speak to understand how these communities burn down, because we have the answers, and the insurance companies know how these burn down. And so coming up with the solutions are there. We just need to be able to, and Kimmy will talk about that a little bit, pull this together into a package where it's palatable not only to the communities, the leaders in those communities, but also to the insurance companies, right? And that's what we'll talk about here in a little bit. So I think with that, I'm going to pass it. Oh, I'm not. Sorry about that. Still got one more to go here. So this is a great example of what happens when those embers get lofted. This is up the Sleepy Hollow fire in Wenatchee. You had a fire that came in, and you can see the structures at the forefront are destroyed through structure to structure ignition. There are still green trees around those. The fire then stopped there, but the embers got lofted 2 miles in front of this fire. Those embers landed on pallets that were stacked outside a fruit packing plant, and destroying that entire fruit packing plant. So again, this shows that this is not just a residential issue we're dealing with here. This is also a commercial issue, because if you get embers landing in commercial zones like this industrial zone, or like we see in a lot of the Western states, historical old districts that have wooden buildings that have common attics that do not have sprinkler systems in them, if you get embers landing in those buildings or near those buildings, you can lose entire blocks of historic buildings and communities in a hurry, which obviously is a huge impact economically to those small towns that rely on that. So I think with that, I believe I'm going to pass it on to Kimmy.
Yeah, thanks, Doug. So now let's talk about everything that relates to how wildfire risk starts to conflate and really complicate what it means for the insurance market at that county or community scale, and what this might mean for homeowners. So before we get into this, let's provide some of the foundational overview information and the context for understanding what is insurance in the first place, because insurance is really complicated. And trying to grapple with this in a way that makes sense and understand it and how it actually impacts homeowners' coverage is really critical in order to identify appropriate solutions moving forward. So first and foremost, insurance is pooled risk, meaning that an increase in potential loss translates into price adjustments across the board and through the spreading and sharing of risk amongst all policyholders. When insurance providers are likely to operate at a financial loss, they will modify their policies in high-risk locations in order to remain financially solvent. And what this means is that risk is distributed to everyone who has a policy. In other words, a hurricane in Florida will impact the premiums that you pay in Arizona or where I live in Montana. And it is through the pooling of that risk that the insurance industry is able to cover costs in one impacted area by adjusting the price of insurance in another area of that network. Again, insurance is pooled risk. It is also financial resiliency, meaning that a healthy insurance market benefits everyone because it reflects the ability for homeowners, local governments, and the state to absorb a financial shock and rebound. Quite simply, those with insurance will rebuild quicker and more efficiently than those without. And then lastly, but very, very importantly, insurance is not risk reduction. It is risk transfer. By implicit design, insurance is post-disaster recovery. And while insurance is a critical piece of this solution or this crisis, it alone is not the solution. Insurance will not change the risk already on the ground. It is simply a price signal of the existing risk. So, if insurance is a price signal of risk, how does it relate to wildfires? Well, let's track this out and see how it truly unfolds at that community scale. As I noted earlier, wildfires are getting more expensive, and for many insurers, providing coverage in high-risk locations is becoming cost prohibitive. Further, the lack of upfront mitigation measures discourages insurance providers from wanting to remain in the market. As a result, insurance becomes increasingly unaffordable and inaccessible, stressing both homeowners and the insurance industry. Insurers cannot cover their losses, and homeowners either go without insurance, become underinsured, or pay higher rates for their coverage. An unstable insurance market then has cascading implications on the housing sector, the financial security of mortgages, on property values, and in financing municipal bonds. And this last piece is really important because what many people do not know is that insurance providers actually purchase a vast majority of those municipal bonds based on the assumption of a returned investment. So when that financial return becomes uncertain, insurance providers are less likely to purchase the bonds in the first place. And as many people in this room are aware of, such an outcome would compromise the ability to fund key community services and capital improvements. So through the lack of being able to finance those municipal bonds, it has direct implications and negative outcomes for the communities that are trying to finance and fund their key critical services and improvements. When a disaster does strike, those without insurance will struggle to rebuild and acquire housing. Displacement and dispersion increases. Local government budgets become strained, and the federal government will spend billions and billions of dollars in post-fire recovery and relief efforts. This is the scenario that plays out time and time again in recent catastrophic wildfires. And in as much as we know how homes burn down, so too do we know what happens when the smoke clears and after a fire. The impacts on insurance and therefore the ability for a community to rebound can be significant. So then the next question is, how do you break the cycle? What are the interventions that are needed to disrupt this scenario from playing itself out over and over again? So to end this, I'll turn it back over to my colleague, Doug, who can talk us through our proposed list of ingredients and solutions for better addressing this. Back to you, Doug.
Thanks, Kimmy. Okay, we are going to kind of pull this all together. And again, like Lucinda said, this is the first part of a series. And so we're keeping this pretty high level here. We'll dive into more of these topics in the future, but we're going to talk about this community level risk reduction strategies and what's important and what's part of that. So to keep insurance affordable and accessible, community risk reduction strategies must occur at both the parcel level and neighborhood scale. And I think that's one I want to spend a few minutes on here. We need to remember, and I know this is fairly basic, but we need to remember that even insurers are concerned and need to see action at the neighborhood and community scale, right? They know the science. They know that if I do everything to my house to mitigate that wildfire risk, and I've done everything there, but my neighbor Kimmy has done nothing to hers, they know that that house next door to me is still a huge risk to my house, even if I've done everything correctly to it. So there's still a high likelihood that they're going to drop my coverage because they understand that risk. So we get that question a lot on, hey, I've done everything to my house, and why is my rates gone up, or why is my insurance coverage being dropped? Like Kimmy had shared, it's a pooled risk, and they need to see action at the neighborhood scale for them to feel comfortable, because like we talked about when we talked about how neighborhoods burn down, it doesn't matter if one house here and there have done everything right. If there's one vulnerability in that neighborhood, that can still cause the entire neighborhood to be leveled from fire. It also needs to be demonstrated to and validated by insurers, right? I mean, the insurance companies need to have buy-in on this. They need to agree with our mitigation actions, they need to be assured that they will continue, and they need to be part of this conversation to make them comfortable agreeing to these standards. Obviously, it needs to be approved by state regulators, and it needs to be maintained and monitored. We know vegetation grows, trees are cut down, trees are planted, outbuildings are built, home or boats and RVs are purchased and parked next to homes. So this isn't a one-time deal. The fire environment and the risks to communities changes on a daily basis with season, with droughts, with new developments in a community. It changes consistently. And again, insurance companies know this, and we need to make sure that we work with them so that these community strategies are maintained and monitored. We'll talk a little bit about that here in a minute. And so we've really come up with 5 ingredients for a successful recipe that we feel that reduces this risk and possibly allows insurance companies to feel comfortable staying in or coming back in the market. And I want to be clear that we are not saying that insurance companies are going to lower their rates if we do all this, right? We are trying to find ways to keep them in this market and to renew people's insurance policies. So those 5 ingredients include staffing and capacity, data, communications, collaborative partnerships, and money. And so we'll kind of dive into each of these a little bit real briefly and give a high-level view of this. And again, we'll probably be diving into this more in future sessions. But staffing and capacity, people, right? We need people to get this work done. And I don't think I'm sharing anything that nobody knows there. It's going to take folks in fire departments or working closely with fire departments to address the risks to structures and to parcel level property risks, right? This is that ground truthing piece, going parcel to parcel and seeing what's there. Is that parcel a risk to the community? Are there things on that parcel that can be mitigated so it's not a risk to the community? Because community risk starts at the parcel level. And so we need people to be out there educating folks and chipping programs and doing what needs to be done to mitigate that risk at the parcel level. And as we kind of take a step back a little bit, we also need to look at the neighborhood level and that reducing that risk between structures. These fires start at the parcel level, but once they quickly transition into the neighborhood level, and that's where we have a problem that can be really hard, if not impossible, to stop. And again, this is fire departments taking a look at not only where the highest risks are with each parcel, but where are the other risks? Are there fire pathways coming into communities from parks or from riparian zones or from other places in the community? And are there places we can mitigate that risk of looking at this from a higher level scale, a neighborhood or broader scale? And this is where, again, we can take organizations like Firewise and some of those volunteer organizations that come in that can help us with that. And then taking a step back even farther in terms of staffing and capacity, it takes people outside fire departments. It takes land use planning staff, folks who understand where and how a community is going to grow and develop, because even though we can address the current risks that are on the ground, we also need to address potential future risks. And knowing where is a good place to grow and maybe isn't a good place to grow is important. And with that, we need people in all of city staff, and we need leaders who can make these tough choices. So, having staffing and capacity is a huge piece of what is going to make insurers feel comfortable coming back or staying into a market. The next piece of this is this data piece, right? Falling back on the science part of it. Having inspection system and parcel level tracking systems that we can put in that landscape data. We can put in the structural data. When was it last inspected by a fire department, whether that be a required inspections or just a voluntary inspection? And what did it look like? And what were the recommendations that we asked that homeowner to do? Are there risk maps in the community? And how accurate are those risk maps? And how new are those risk maps? As we see a lot in communities across the country, risk maps are great the day they were made, but trees grow, bushes grow, lots are not kept up, and so those risk maps change quickly. And the other thing we see with risk maps a lot is that depending on the scale they're used at, they don't accurately reflect the actual risk to the community on the ground, right? We can look at a state level risk map, and when we kind of zoom into a neighborhood level scale or a parcel level scale, it is not accurate. So we need to be able to use risk maps and risk measurements that accurately reflect those risks that are on the ground, because that's what the insurance companies are going to use. I guarantee it. And again, that goes with the last one, alignment with insurance companies. We may not have their science, and they may have ways of collecting data that we don't have. But if we can be in alignment with what their concerns are and what they feel needs to be mitigated, then we're that one step closer to being able to keep insurance companies in our communities. The third one, which I think is probably the most important piece, is this communication piece, making sure that the community, the homeowners, elected officials all understand the risk. Again, we see this over and over. What communities and elected officials sometimes believe is their risk is not the actual risk on the ground. When you talk to an elected official and then you talk to somebody in the fire department, there can be very wide-ranging not agreements on what the actual risk is on the ground. So we need to make sure we communicate that risk effectively and accurately. Again, we also need to make sure we have people at the table early on. And again, Flagstaff and Coconino County have done a great job with this, bringing stakeholders who aren't normally part of the wildfire conversation to the table early, get their input and to see what their concerns are, right? Because we all want the same thing. We want safe communities that aren't going to burn down, and we want access to insurers. And so we want the same thing. It's just finding a path forward with that. And I actually live and work in Oregon, and when Oregon tried to adopt a state wildland urban interface code a few years ago, the code was good, but they didn't do any outreach ahead of time. There was lots of misconceptions, lots of fear, lots of misunderstandings about what it was going to do to people on the ground. And that code failed before it even got a foothold on it, right? Because Oregon, we did not reach out to people and inform them and share with them what that code really was about and how it was going to help them. And so I think the communication piece is really important, just sharing that we're trying to work together. We're trying to get this insurance problem solved. The fourth one, again, pretty high level, but this collaborative partnerships, I think Lucinda talked about that. Kimmy talked about, we all know this, right? No single entity can do this alone. It's going to take everybody. It's going to take public and private collaborations, being creative with that, local and state organizations, kind of like what we're seeing today, people working together, maybe non-traditional wildfire people as part of this. Universities, you guys have Northern Arizona University there, which is a great resource to be part of this problem. Tribal partners and community leaders. Everybody's going to need to be part of this if we're going to try to solve this issue. And lastly, no surprise, money. It's going to take money to do this. And whether it be through subsidies and grants like the CWDG grant, cost share programs, incentives, technical assistance like the program Kimi and I work in, CPAW program, where we obviously offer our technical assistance free to communities, but there's lots of programs out there that do these kind of things. So the money's the big one, right? And by remembering and reminding ourselves and our leaders that what money we spend now is pennies compared to the dollars it will cost in the future, like Kimmy spoke on, after a wildfire, right? So we need to be able to find the money, allocate the money to solve these problems on the front end, because it's much cheaper to do that, not only financially, but also on the human scale than on the back end. And so I think to close this first session out here, this is our idea of our wildfire toolbox, right? Again, it's going to take everything. It's going to take the response and operation folks. It's going to take voluntary measures, community plans, land use planning. It's going to take everything. And we get this question a lot, can voluntary measures do it? And we support voluntary Firewise programs. We think that piece is critical. And we feel that, putting fire on the ground is critical. But as science has shown us, if there are vulnerabilities in a community, that community is still at risk. So we also feel there is a time and place for certain types of codes and standards to be put in there. So everybody is required to meet a certain standard when they build or develop in a high wildfire zone to make the entire community safer. So again, like Kimmy said at the beginning, we applaud everybody here for bringing us into this. It's nice to be able to come into an organization and a community on the front end and talk about this before the real problem kind of arrives. We need to remember that if we find a solution to this insurance problem, it's also the same solution to this wildfire crisis piece, right? It's the same solution to a different problem. And so we want to applaud everybody there for taking a step forward and hearing us out on this. I know this is pretty high level. We are excited to dive into this more into the future. And thank you, Lucinda, for inviting us on this. I think with that, I'm going to pass it back to somebody there, and we're going to be open for questions.
Well, thank you so much. Really appreciate that. We're getting our Lucinda Andriani's coming up here.
Well, thank you very much. That was, I think, what we needed to understand what is both the breadth and the complexity of this issue. Just understanding, I mean, you can see now that there are multiple elements, like just looking at the insurance industry and understanding those dynamics and how are rates set and all those things that influence those pieces. Maybe before we launch into board comments and questions, maybe Kimmy and Doug, you could talk a little bit, give us a little glimpse at least of some communities. I know Boulder, Colorado, you've spoken about that, what they've launched, I think, over the last couple of years. Maybe give a little bit of glimpse of some of the things that they've done that have been successful there and what you see as kind of the key elements. I know, that one of the pieces of this is going to be us learning. And then what do you see? Obviously, California is kind of ground zero, and there's a number of different factors there. But I also think there's a lot of learning coming out of that. And I know there's been a lot of work between regulators, insurers, and communities to identify what are the key steps that individuals and communities can take. And then that whole package of, like you showed, having the regulatory framework that endorses that, and then having the insurance companies endorsed in what they do with the regulators. Maybe give us a little glimpse of a couple of those pieces before we launch into questions.
Yeah, absolutely. I can start on that, and then I'll turn it over to Doug to help fill in everything I've missed. So the first question with respect to Boulder County that was highlighted by Lucinda, this is an example we hold up a lot in the wildfire community, and it was developed and launched in partnership with the Land Use Planning Department out of Boulder County, Colorado, alongside the fire department. And what it is essentially a home certification program that's called Wildfire Partners Program. And what this does is it works with homeowners individually over the course of a year. They hire on-site inspectors to come look at a property and assess it for risk, not just the property with respect to vegetation and what we call defensible space and the non-combustible zone, but also with respect to the structure in the home itself. So they provide a full assessment checklist to the homeowner. The homeowner has 1 year to fulfill that mitigation measure checklist. And if a majority of the mitigation measures are met, then they get a certificate. And the certificate provides two valuable outcomes. One is that it demonstrates completion of the mitigation measures by the homeowner. And it is used honestly as I'm going to just use the word peer pressure, but it's for the optics of recognizing within the neighborhood that individual homeowner has done everything they have done could do really to mitigate the risk to their home and property, therefore bringing down the risk profile to the entire neighborhood. And it's a placard. It's a visual that they stick on their front yard, and in a way they can showcase what they have done and try and increase similar compliance to their neighbors. So that's one thing it does. The second outcome is that they have worked with the insurance providers in that region, and the insurance providers have agreed to provide ongoing coverage. Insurance retainment is the word. As Doug noted early on, this is not a reduction in premium coverage price. This is an ongoing retainment of coverage. And so the insurance providers have said, yes, we see that you have demonstrated all of the appropriate mitigation measures. You have brought down your risk profile. And for that, we agree to provide you ongoing coverage for 1 more year. And it's a yearly renewal. And every year, the homeowner needs to complete that mitigation measures, get assessed, and then they get recertified. So that's the Wildfire Partners Program. And again, it's a great example of a collaborative partnership between the land use planning, the fire department, the insurance providers, and individual homeowners. This model has been replicated to some degree in places like California and elsewhere. Probably the most notorious model right now is, again, through the Insurance Institute of Business and Home Safety, IBHS. This is called the Wildfire Prepared Home Certification Program. They also have an Accelerated Plus program, and it essentially requires homeowners to comply with building practices and defensible space and landscaping measures that reduce wildfire risk exposure and ignition vulnerabilities. And if they do so, then they get an IBHS Wildfire Prepared Home certification that they can turn into agreed upon insurance providers for retained coverage. And this is being piloted throughout California and other states right now. And it sets a standard for which homes have to be met in order to meet what is considered to reduce a vulnerability risk profile. So what we are seeing in places like California and elsewhere where this insurance crisis is unfolding is that it has to be met, as Doug noted in his talk, not just at that parcel level, but it does because of how wildfire behaves once structures ignite and the conflagration, particularly under a high wind event and that radiant heat spread, is that it has to be at neighborhood scale. And so while voluntary measures are absolutely critical and part of this, to have it comply with a accepted standard is really what the insurance providers are also looking for. Doug, what did I miss in that?
Yeah, no, I think you're right on, Kimmy. I think what I would add to that is, although those programs are great and they're a great step forward, they are challenging to put into place, as you can imagine. The communities that have done it worked hard, and they had all the right pieces of that puzzle to come into place. But there is a lot of places it is just, it may not happen, right? And so, we worked in close to 90 communities across the country, all over, and we get asked this question a lot. And there's a lot of those communities that don't have all those pieces, but they do know that what the insurance companies are going to want to see is exactly the same thing that the wildfire folks in those communities want to see, right? These solutions to reduce the risks at a community scale. So when we approach them, if there is just not a way that they're going to be able to build these public-private partnerships like Kimmy was talking about, we still share with them the importance of taking the measures to make that community as safe as possible from wildfire. And like Lucinda said, there's a broad array of tools to use. What we recommend, and as you can imagine, what we recommend in Southern California, we would not recommend in Eastern Montana, right? It would not play well there at all. So we are not saying that codes or any of these are a one fits all in any community. There's different tools that work in different communities. That being said, insurance companies need to see requirements at the community scale before they're going to do anything. So we always tell communities that there's no guarantee that the insurance companies are going to jump aboard this train, but we might as well do the right thing and get the steps necessary in place. So if there is that opening, that they know we're committed to that. We've done the right thing. We've made those hard choices, and they're willing to stay here. We've talked to a lot of insurance companies. I know Lucinda has as well. And they want to be there as well. That is their business model. They they would like to stay in communities and be able to write policies there. So they are hoping for the same solutions we're hoping for here.
Right. I think that gives us kind of a glimpse of, in particular, what is the role of a county, right? Where can a county influence this issue and have an impact? And I think that helps us kind of see, where do we fit in that, in creating those partnerships really, to bring about, potential change and it's systems change. I mean, this is a system issue and it's got to take a system level change. And I think there's obviously a bunch of elements to that. One in particular is how do we create the financial dynamics that can support people with taking the steps to do that work, right? and I still see a lot of opportunity, frankly, from the industry itself, the insurance industry and the mortgage industry. Where can they fit into this to provide us with the financial products that can help people invest in their homes to make these kind of improvements? Because most of the improvements we're talking about are going to affect a home's value for at least 10, maybe 20, 30 years. So how do we build that into that system? Something we'll take up in a future session. And if there's things emerging on that front, or ways that we can advocate for those kinds of things to take place, because we've got to have the financial tools to do this and mitigate risk, right? I come from the energy industry, so mitigating risk was paramount all the time. That was premier discussion all the time. And, you've got to think about what are those strategies. So with that, let's go ahead and turn it over to the board. Back to you, Chair, to see if there are questions or comments from the board that you'd like to ask of Amy and Doug.
And I'm sure there will be, one of the points I'd like to make is that you're right. It is about mitigating risk. And it's one of the reasons that those of us, here in Coconino County, the Board of Supervisors, our flood control district, that we have really looked to forest restoration and our partnership with the Forest Service, quite frankly, with the state and also locally here with the City of Flag, to do extensive forest restoration work to help, quote, mitigate the risk. Because if in fact the price or the premium is determined by the risk and by the loss, hopefully being able to take care of it on the front end through forest restoration will hopefully result in lower costs, because it'll be lower number and incidents, or at least the intensity of the forest fires. So, it's one of the reasons that we have done that. Also, when you talk about voluntary measures to do, I think that is another area where the flood control district, community development, and really the county and the board really have looked to our community to try to talk about fuel reductions, hardening homes, being fire wise, working on emergency preparedness. And then, even further than that, really taking a look at our building code and our building codes and standards and for hopefully helping to mitigate that risk. So, and we can do that. And I think we need to still do that. But it also, we need to look at this partnership from state, federal, local, and industry level to take a look at the premium costs or alternatives so people can be covered for wildfire insurance and wildfire risk. So, but this is great. It helps to really kind of break it down. And I'm going to turn this now to members of the board. Yes, Supervisor Ontiveros.
Thank you, Chair Horstman. Thank you both for this presentation that you gave today. It did give a pretty high level look at it. And the one question that I still have, though, is there was a term, it was called, I think, insurance alignment. And so it seems from what I am observing, I see homeowners doing everything that they think the insurance company is going to want, fire departments encouraging them to do it. an insurance company still not accepting the work being done. So it seems to me that there is a gap in understanding of what needs to be done and what the insurance companies are willing to accept. So how do we close that gap in the conversation so homeowners really know what to do?
Yeah, again, I can start answering that and then I'll turn it over to Doug to finish. So there's a couple of different ways that we are seeing this being addressed, because what you've just noted is brought up many communities over and over again, and counties. And so again, the certification program is standing out as a model template because it does exemplify and demonstrate that checklist that is accepted mutually by the insurance provider and the homeowner. Right now, IBHS Wildfire Prepared Home is the only checklist widely available that does this. California has a similar model. It's called Safer from Wildfires. It's a bit of a tiered down approach. But the purpose of Wildfire Prepared Homes is to answer that question, is that it is essentially the catalyst or that translator between the insurance market and the homeowners that says, hey, homeowners are doing all of this. And the insurance providers say, yes, we see that they have been certified as such. Okay, we will look at that policy, or we will provide coverage or continue to renew it, or whatever their policy adjustment may be for that particular homeowner. IBHS is now also deploying this at a neighborhood scale because, again, recognizing that radiant heat and structure to structure risk is so high, they need that neighborhood certification as well. So that's one option and approach for doing so. Additionally, what you're talking about is data transparency, right? It's just making this information publicly transparent for both the homeowners as well as the insurance risk market, so that the information is widely accessible and known, and that the discrepancies about what is being done and what is being accepted is more widely recognized and known. So there are efforts, and I know Neil Chapman and his team through the City of Flagstaff's fire department is looking into this, is the Wildland Urban Interface Data Commons, essentially. So this is a piloted effort right now, and it is looking at trying to make essentially a clearinghouse of information available for homeowners, residents, elected officials, and the insurance market. So everybody's using that same toolbox to try and understand what is the risk and how do you bring it down. And then the last one is just open, transparent conversation and ongoing communications and conversations with the insurance providers. It takes a lot of time. It's really messy. You have a lot of providers in one particular region. They aren't able to talk to each other through occlusion practices, but you can still get them all to the table to understand, okay, we recognize these risks are increasing. What is it that they need to see? What are the checklists, that mitigation measure, application or whatever they're using to assess this risk, and how do we align it with what is happening at that personal, neighborhood, and community level? Doug, what would you add to what I left off?
Yeah, I mean, I think you covered it, Kimmy. That's a great question, because I spent 25 years as a structural firefighter, and some of the biggest frustrations we would have is when we went out to tell people what they should do, and they'd spend money on limbing trees up or doing this or replacing a roof, and the insurance company would come back and still drop them or raise their rates, right? And we felt we were the experts on that at a parcel level, but because of proprietary information, we weren't able to get anything from the insurance company that shared what their restrictions are. And it was extremely frustrating and challenging for both us and the homeowner. So I think kind of what Kimmy was saying, this transparency and this standardization is what the future looks like. And I think maybe Lucinda brought this up a little bit ago. I think that is a role that a county can play, is being part of the forefront of that program at a county scale, and bringing those insurers in and at least starting that conversation to make sure that at least within that geographical area, everybody is playing with the same scorecard. And if a homeowner drops money on doing something, they know that that's going to have implications in retaining coverage or maybe not a inflation of their rate. So I think there is a role for county level government to play in that, to start those conversations, bring in fire departments, bring in the insurers, and see where they can end up in that.
And I think that's also where the governor and there's a Department of Insurance and financial institutions, DIFI, I guess, are trying to do exactly that, is to bring all the players to the table, if you will, to talk about affordability and the availability for personal homeowners insurance, and also looking at ways that we can reduce the risk in these forested areas or the wildland urban interface, which we have so much of here in Flagstaff. So, and the county is playing a role in that. In fact, we're involved in trying to really get that off the ground. And so we'll continue to do that. But I think what you're talking about really shows how important it is to have these partnerships from industry to federal to state to local, and really how complex of an issue this really is. So Supervisor Fowler.
Yeah, thank you. Sounds like we have a lot of homework to do. But we've been working on this for many years through our flood district. So we have some kind of structure in place. But it sounds like we need to identify all our partners, from the construction industry to fire department, to see who needs to be at the table. Revisit our planning and zoning policies, really look at land use, identify where we discourage people from developing, working with developers. They have a great role here, developers, in these policies that we're talking about, and keeping communities safe. And then looks like we need to map out our county. Where are the high-risk areas, and how do we do that structurally to identify which community to work with first, and then go on to the list. Not that we're not working with all the communities, but I think we need to start. Where do we start? Our building codes is another one. We've been hearing that having a sturdy, flame resistant roofs is important to insurance companies. So maybe those are things that we need to really look at and inform our communities with. And community meetings, which we do have, but we really need to, I guess, upscale that. And a lot of these are voluntary too, hoping that each homeowner takes this seriously enough to say, yes, I'm in. So, and Lucinda, you've been very good at doing that all these years, encouraging people to join and making sure the rest of the communities are safe and mitigating. This is just part of the mitigation. And then find out what companies are here, insurance companies, and what is their checklist. Their checklist may not be the same across the board. So how do we identify what checklist is? What is a checklist? That's something that we really need to look at. And then working with the state and FEMA. And then we have challenges. We have an administration that has declared that they're going to significantly reduce funding to the local levels and really concentrate on major disasters, and taking that responsibility of the federal grants and all of that, eliminating that to the point where local governments and the state is going to be really challenged. And it's really opening up great challenge for our work that we're just now talking about, and our first responders, our emergency management grants are going to be, now they're being held back. So, within that atmosphere of these federal, not knowing where federal government is going to go, because we now have the federal council, the 20 members that are in place, and we have a sheriff that is from Florida, only county representative, a local representative. It creates a great challenge and understanding what the local
Thank you. And one of the sessions when we come back, we'll talk about, we've launched working with a consulting firm, completing the community wildfire protection plans and getting those done. And, we've got a number of steps that are there that will contribute to this overall effort that are important. So we'll cover that and hear more from Flagstaff in terms of what they're doing with the guidance from Headwaters and so forth as well. So
Follow up.
there questions or comments?
Yeah.
Yeah.
Just want to say that we already have Firewise program, but as was mentioned, if your neighbor is not complying or is not doing all that neighbor can do, and you've already done it, you're still at risk.
Yep.
So Firewise program
take a
is still
community effort.
here. It's very strong. However, it's up to every individual homeowners to understand the risk that it's creating for it themselves and for the whole neighborhood.
Is Supervisor Vasquez.
Yes, thank you. Thank you for the presentation. It's really good to learn more information about home insurance and how it's being impacted with wildfires. What really struck out with me was the fact that we're at higher risk of fire than 96% of the counties in the country. We knew that, but that was still higher than I would have expected. And so I just wanted to point that out. And I'm glad we're having this conversation because it brings me back to 3 years ago with the tunnel fire, where we had 38 structures burned, and the majority of them were embers that floated. It was a quick fire and
almost all
burned through.
Yeah.
And so that's where we started hearing after that fire about issues with insurance. The year before had been flooding. That year was fire. But those are when we started hearing about these issues with coverage. And we as a board in our legislative appointments up at the Hill would advocate and share these stories about families that weren't able to get insurance for their homes, even in areas that weren't near where the fires happened because of that risk and the fear of mitigating that risk. And so it's just, reiterates why it's so important that we invest in forest thinning, why we continue to look for preventative mitigation efforts so that we can protect our community and that we strengthen our local partnerships with that work. And one thing that didn't occur to me until the presentation is I agree with my colleague. We need to create more partnerships and more relationships with the local insurance companies that are covering this so that we can see where there is some local wiggle room, where there is some stuff that we can at least develop that relationship and see what can be done. Because unfortunately, there are a lot of communities and a lot of homes in our community that aren't able to get health insurance. And quite frankly, it's just not fair. And so, or fire insurance, excuse me. Well, home insurance, fire insurance on their home insurance. Healthcare is a whole nother topic to get into. But the other thing I just wanted to mention was that when the federal government removes funding from FEMA, what that does is a cost shifting effort. And what that means is there's no more federal funding coming in. So guess what? Now the states have to find that funding. And if the states can't provide that funding, guess what? That's a cost shift to the counties. And so what this does is put a higher local burden when there are fires, when there are impacts. We recently had the tunnel pipeline fire 3 years ago. We're finishing up that construction. That construction could have could have never happened without federal funding.
Right.
So if federal funding is being removed for these kind of efforts, where would that leave a community that gets hit with another tunnel fire or a pipeline fire type fire in our community or in their community? So just want to think about those things and really connect the dots and keep pushing for this reform for fire insurance, because it is so crucial for our communities, and it's not fair that they can't get fire insurance for their homes. Thank you.
Thank you. Yeah, 46% of total wildfire costs are borne. Amazing. Supervisor Begay.
Thank you. Thank you, Dr. Barrett, and also Mr. Green. Thank you so much. And certainly I feel that information that you brought before us is something that we cherish, and that, we'll take it to heart. And I know that we do have little things that are going on so far, like the mitigation efforts and stuff that are happening. But I just want to tell you that, it's going to take everyone in this whole community and surrounding communities where there are fires, floods, or whatever, how we're going to try to get them homeowner insurance. And, there's a lot of work to be done. And this is not just a start, but I think, it's uplifting us a little bit more, to get to where we want to be as a county, and to help people to maintain or get homeowners insurance, for their homes. And I know that there's a big toolbox that you guys had mentioned. I think that all of that is something that is very useful to us. And I know that also that there's a lot of efforts that are going on, like the forest thinning and all the mitigations that we've been doing, trying to take it from that point. But it's going to take more than that. It's going to have to work with a lot of partnerships. We have a lot of people here that are always willing to come forth to help us, when we have anything that arises within the county here. So we're just going to have to go back and, go back and see what we have and what we need to do and move forward. And we cannot turn back. We have to move forward, to get it done. And I know, and I have a lot of faith in the staff, our attorneys, our board. Is very aggressive in certain ways, and that's how we've been able to move things forward and get things done. So, but again, the community is always willing to help us also. So just getting everybody together. We have Williams, so we have Grand Canyon area, we have Fredonia, all these places, plus Flagstaff. But I think we're gonna succeed, and that's all I want to say is that we just need to look for the right puzzles, to fit into what we have already. So thank you so much for the presentation and allowing, us to speak and comment. Other areas I started to talk about, but then I was marking them off because everybody was mentioning it. So I just kind of leave it at that then. Thank you so much.
Supervisor Ontiveros, and then Supervisor follows. Supervisor Ontiveros.
Okay, thank you. And this is really a follow-up question to the one I asked about really the bridge between the insurance companies and what homeowners can do. And you indicated the certification program. And you gave the example of that's currently being used in Boulder County, Colorado, right? Are you guys aware of a certification program here in the state of Arizona?
So that is a fantastic question. And what I would say is through the commission at the state level, that IBHS does have a representative at that state level. So I would just recommend coordinating, whether that be Lucinda or somebody else on your team, to reach out to that group and the existing membership, because very importantly, you have IBHS representation already there at the state. I believe whether that can be deployed and has been adopted, I think is probably still something that is going through conversations right now. So for the certification program to be accepted at county level, it does have to go through the state level regulation and regulatory process in terms of getting buy-in. But I do know that is underway. I know IBHS is very interested in exploring it there in Arizona. And if it isn't IBHS, you can similarly apply certification type models the way Wildfire Partners program has done so. And what I would suggest, and I know Lucinda's already thinking about this, is having their director come speak to you in the next panel presentation and talk a little bit about how they went through that process of implementation and adoption.
Oh, okay, thank you for that, because that was going to be my next question, is asking you for the roadmap of how to accomplish this. And I think you answered that. And I know, Lucinda, you're taking notes or on that. We've all heard that. So thank you for that recommendation. I think that's a good one.
Yes, and
Supervisor
we look forward to working with Lucinda on this moving forward. Both Doug and myself are, we've committed to being kind of ongoing thought partners and strategists behind this. It's a great effort that you are all trying to do, and it's a tremendous challenge that you have with a lot of moving parts. And so if we can be helpful in thinking through what that would be and how they can fall into place to get you where you need to be with a similar type of certification program, then we will be in conversations with Lucinda on that.
Supervisor Fowler.
2 questions. I just wondered if these programs, before they were started, if there was an assessment or some kind of a study that was done prior, and then based on that, implement the program. And then second question is, I'm just wondering what the average cost is for a homeowner in general. I know that it's all different, to bring to be brought up for their property to be brought up to standard. I think about how some homeowners may not be able to afford all that needs to be done. So how does homeowner how are they able to do their own mitigation to be able to meet those standards?
So the first question was relative to the assessment of the area. And I mean, I can share, and Jay can too, that there have been a number of wildfire assessments done across this county by, various entities and so forth. And I think, there's a reasonably good understanding, but that is a component of the CWPPs, is actually looking at that. And I think, as was mentioned, that Kimmy mentioned, that there's an effort to try to come to an agreement with the various parties, insurers, et cetera. Like, what is the data we're going to use for that purpose, right? So that we can all agree, where are the risks the most significant and so forth, right? But we won't run out of places where we have significant risk for a long time. We got a lot. And I think we've been thinking here mostly forested, and that obviously is a key issue, but there's a lot of areas that are grassland. Look at Colorado. The largest number of homes they lost, right, was from a grassland fire. And so, it isn't just the pinyon juniper, the PJ area. I mean, we have wildfire risk across our entire environment, not just the forested. Forested is the most prominent, of course. So
thank you, Lucinda.
And we'll cover that other piece too, in terms of, that's what I brought up earlier, is how do you create the financial structures to support people with making these investments? I don't know, Doug, if there's a rough figure out there. I've heard something like 60 to 80,000 per home. I don't know if that's in the real ballpark of what it takes. It certainly depends on what the home has now, right? Are they starting with a shake roof, or are they starting, with some measures that have already been taken, right?
Yeah, there's studies out there. Kimmy did a great study a couple of years ago on that, and it certainly is a wide range, and it does depend on what's there. Obviously, there's a few big ones that you need to check off right off the front, like a shake roof can be an expensive one, but once you get past that, and depending on the agreement with the insurance company and that piece, depending on what your checklist is, if we're just talking wildfire mitigation measures, it really can depend on the structure, what slope it's on, what kind of vegetation it's in. There's some really small, cost-effective things that can go a long way to reducing the risk of wildfire to a home, especially when you're talking about ember transfer. So, yeah, we can quote some numbers, but it is a broad scale, and it's really hard to do that until yeah, you know what you're starting with, where it is, what's around it. Is there a home 5 foot away from the neighboring property line, or is it on a 2-acre parcel, right? They all make a difference to what mitigation measures the experts would recommend for that. So, I mean, Kimmy, I know you probably have more knowledge than I on this.
No, I would just say site-specific conditions greatly complicate actual cost. We know that the range can be as minimum as $1,000 if you're just looking at exterior vent replacement to reduce ember penetration to the interior attic space, as Doug noted it in the video demonstration, upwards of $60,000 if it's an entire retrofit and rebuild. So that's another question in itself. Are you dealing with existing structures that have perhaps legacy challenges, or are these new builds? We know that new builds are going to be more affordable because in that sense, what you're looking at is material replacement or substitution. Instead of using wood siding, you're going to use fiber cement siding. That may actually bring down the cost. Similarly, instead of using a cedar shake roof, you might use asphalt, which would bring down the cost, or metal, which may increase the cost. New builds, though, overall are going to be a more effective and affordable way of meeting a wildfire mitigation standard. Retrofits can get quite complicated and a little messy depending on that site-specific nuance and variability and vulnerability.
And I
Thank
think we definitely do not want to discourage people thinking, oh my goodness, it's too expensive. How can any of us do this? There are, and Doug, I'm so glad you underscored that, there are cost-effective ways that we all have that we can reduce the risk now in our own homes, in our own neighborhoods today. And I think that we really do need to focus on that. I know that's one thing that we've been working on as a board and in our community meetings is to get out and to do this education and to work with individuals and with their neighborhoods to help on some of these fire-wise practices. So, I would hate to leave the impression that you don't have tens of thousands of dollars in a bank somewhere to be able to do some of this extensive cost for your homes that all is lost. I think there are a lot of many practical things that we can do now. So I'm really glad, Doug, you really underscored that. I think that's really important. And Supervisor Begay, I know you had a question as
I have a follow-up.
sorry,
Back
Supervisor.
to
Fowler.
the study. I know we have studies on our fire and flood mitigation, but I think we need to look at our whole county. We don't have, we have quite a bit of study in this region, but I think the whole county and how do we may consider that. It's a consideration that is a reality that I think we need to just have. And is that something that needs to be done? That's something I think we need to just have in case we need to at some point. I know that
Yeah,
there's
we
more
can
risk
certainly do a
in
session
some
and
areas.
share the different models that are out there that have assessed the fire risk across the county, and those will be incorporated and talk about the CWPP process and all of that, because that's part of that whole effort. So we can certainly bring that back. I think we're nearing our time here. Right. Thank you. Thank you. And I want to thank the medias here. We've got great media coverage, which is really important to getting that word out. And we really appreciate their engagement. Thank you.
Thank you.
And thank you, Kimmy and Doug. Really appreciate everything and your continuing partnership.
Thanks for joining us this afternoon. Really appreciate it.
Thank you so much, Board of Supervisors. Thank you, Lucinda.